Hello, everybody. It's that time of the month. We're going to be looking at the latest statistics for the Toronto area's housing market for the month of November. My name is John Pasalis. My team and I help buyers and sellers throughout the Toronto area make smarter real estate decisions. If you'd like to meet with me and my team, you just click the link in the show notes below or send me an email at askjohn@movesmartly.com. So the stats came out for November. As always, we're going to be drilling down, looking at the numbers for low-rise houses. So that's detached semis towns. We're going to look at the condominium market, and we're going to look at some rental stats as well for condo apartments. Now, one thing I'll kick off by saying is that, sales are up. This kind of usually signals that the market is uh, busy, inventory's trending down. We'll go through all those numbers. But beyond the numbers, it feels like the market is still quite slow. We're seeing, again, not a ton of activity on showings, not a ton of offers, fewer offers selling for multiple offers. Again, there are a few here and there that are getting tons of interest, but the market is not crazy. I mean, again, it's interesting because what we see on the ground, I mean, this is a good episode, an example of what we see and kind of feel on the ground is in some ways a little bit different from what is in the data because the data shows, inventory levels trending down, the market being quite busy, but we're still kind of quite sluggish. So we're going to unpack some of the latest trends, starting with the numbers for low-rise houses. Sales up 34% over last year. And again, just like last month, we're really coming off of a very low base last year. That's what we're comparing against. These are year-over-year comparisons. And last year was pretty much at a 20-plus year low, if not even longer than that. So again, sales are up, but they're still relatively soft compared to historical levels for the month of November. So yeah, we're improving. Things are up about 34%, but again, not an overly busy market in terms of sales volumes. We're still well below the historical average. Now, when we look at new listings are up 4%, 6,300-ish, very similar to last year. Active listings are up 12% year over year, just over 11,000 listings. And you can see for a lot of this year, listings volumes have been up. Number of active listings are well above previous years. This is one of the reasons why the market has been relatively slow. When we look at the months of inventory, which basically looks at all the active listings, divides that by the number of sales for the month, and it tells us how long the market would take to clear all the current inventory if no other homes sold. I mean, that was roughly the same as last one, but a little bit 3.1, but pretty steady. And that is a pretty slow market in Toronto. Again, inventory levels are usually lower. They peaked at over 4 months a couple months ago. But again, it's still a slow market to have 3 months of inventory in Toronto. Not as competitive as maybe some people are used to seeing. And I think maybe this is, some buyers are worried the market is going to become a lot more competitive. Maybe I'll chat about that in a future episode. I'm not sure if it's going to be an insane year next year. But again, that's where we're at. So again, not a lot of change. I think the important thing here is that, yeah, we saw months of inventory fall September to October, but October, November, not much has changed. The market has kind of stayed the course. And interestingly enough, when we look at, percentage of homes getting multiple offers, that has also trended down a little bit. Again, this isn't a perfect signal. Again, it's a function of obviously how many agents are listing low, but again, you're only listing low to get multiple offers in a busy market. You can't do that, in today's market. Only the nicest homes are going to get multiple offers. So we're seeing bidding wars, multiple offers, prices over asking cool down a little bit to about 28%. Now, average prices are up year over year, close to 5%, 1.37 million average price for a low-rise home. And again, a lot of this is just, some of the differences when we look at the trends between low rise and condo, but the low rise market is doing a little bit better than the condominium market. Part of this growth was driven by, City of Toronto and I think Halton as well, a little bit more so than some of the other markets. But again, year over year, slight increase, 5%. We'll see if that holds. I wouldn't put too much weight in 1 month of data. Market update for condos. Again, condo sales are also up 32% year over year, just over 2,000 sales. Again, coming off of a slow base last year. But again, some signs of life, I'd say, after a very, very sluggish, past 6+ months or so. But again, not sort of any blistering, surging demand, a slight uptick. And we've also seen new listings up 6% as well. Again, this is kind of contributing to sort of the cooler market. When we look at active listings, they're up 19% over last year. And again, a lot like the low-rise market, we've seen active listings remain quite high, well above kind of what we're used to seeing. Record number of condos available for sale compared to what we've ever seen before, and record numbers relative to any month in any given year. So you have a lot of inventory of condominiums. And again, this is contributing to the cool down. When we look at months of inventory, very similar to houses. I mean, obviously not the same level. We have 5 months of inventory, but not a big difference from last month. They dipped a little bit, but the market in many ways just plateaued last month. And same with bidding wars, not many. When we look at average price for condos, they're down 4% year over year. So again, you have low-rise homes up 5%, condos down 4%. Will the market move in slightly different directions in the new year? I think this is one thing that we need to be looking for. It's very possible, but we'll see how some of these trends play out. Finally, we're going to look at the market stats for condominium rentals. This is all condo rentals in the GTA. Number of leases are up 15%. So again, healthy demand. Again, if we look at the red line, leases are actually up over last year, just over 4,200 leases. The challenge for the condo market, for the rental market, is that listings are up and active listings are much higher than historical norm. New listings are up 4%, active listings up 25% year over year. And again, for most of the year, active listings for condominium rentals for rent have been quite a bit higher than we're used to seeing. We're kind of close to just 9,000-ish or so units available for rent right now. That's a relatively high volume. And this has all pushed a little bit of downward pressure on rents, down 3%, and well below kind of the peak we'd reached, about a year plus ago, but down 3% year over year to 2,700, just 2,761. So again, a sluggish rental market. If you're trying to rent a unit, you're going to find that there's just not a lot of activity. A lot of tenants don't want to negotiate. They just sort of take the price for what it is. So, sometimes units that have been sitting on the market, as soon as they reduce $100, they end up renting. But it's a slow market, and I think investors need to be mindful of that. Hope you found that helpful. If you have any questions, please post them in the comments below or shoot me an email at askjohn@movesmartly.com.